This is Joseph Giacobelli. I'm an analyst, investor, author, and the host of the Asia Climate Finance podcast, which is a philanthropic series dedicated to the promotion of knowledge and discussion on sustainable finance in Asia, from the perspective of the business of decarbonisation and the energy transition in the region, which consumes about half of the world's energy and electricity. Please support this effort by liking and by subscribing to the podcast. Hello there. This is episode 23 of the Asia Climate Finance podcast. It's actually our last episode for 2022, but don't worry, we've got a great lineup for 2023 as well, with some really great guests. Today we measure the current temperature of the energy transition in some key Asian economies with one of the region's most experienced and respected energy economists and consultants, Mike Thomas. Mike is the managing director and actually the founder of a consultancy, the Lantau Group. Please support this not-for-profit effort by subscribing and also liking the podcast on the various platforms. And also any of the opinions are absolutely personal and in a way reflect those of present or previous employers. I hope you enjoy the show. Hello, Mike, and good afternoon. How's life in Hong Kong?
Hey, Joseph, it's good to see you. Life in Hong Kong is it's getting better by the day. We're winter, it's a little bit cooler, but we can almost travel now.
Wow, that's pretty great news that we're going to be able to restart our business travel out of Hong Kong without all the restrictions. Mike, as I usually do, I want to start with about you. I mean, could you tell us a little bit about your background? And obviously you've got several decades to summarize in 2 or 3 minutes.
Oh, sure. Well, no, thanks. This is the age of self-identification. I self-identify as an economist, but I don't actually have an economics degree or a PhD. I have an undergraduate degree, but I've played in that field, in that area, in consulting, economic consulting, for 3 decades now. And I got pulled into the energy sector because that's a really great place to apply economic concepts and public policy and analytics. And those were the 3 things that I kind of focused on in my early stage career. And then during that period, which lasted long enough, some things happened, like electricity markets got formed and environmental markets started up, and then liberalization and privatization started happening in different parts of the world. And I got transferred actually to the Asia Pacific region back in 1997 and followed New Zealand, Australia, Singapore, and several other markets in the region that were exploring aspects of deregulation. And I just happened to be here when the pivot to Asia started to happen, and you started to see now with renewable energy one of the most dynamic market environments for investors and developers, and one of the most challenging areas for global decarbonization. So right place, right time, kind of thing. But that's been my journey, sort of practical economics through the energy sector.
So you started with energy, and when you mean energy, oil and gas, electricity, the whole spectrum. When did you kind of start getting more actively involved in the whole kind of decarbonization, clean energy game out here in Asia?
Well, I actually made a connection. The clean energy game in Asia was a late starter by any reckoning compared to some parts of the rest of the world. I think the concept of a duck curve was already getting well advanced before anybody thought that significant, activity would take place in larger scale solar and certainly wind. So that all kind of came later. In fact, I remember many conversations with various, large scale typical utilities saying, why would we ever bother to invest in renewable energy? It takes the same amount of effort to get 25 megawatt solar farm as it takes to get 1,000 megawatt power station across the line. We're just going to stick with the big stuff. That's never going to go away. So the pivot has actually been very fast and very late, within the last, honestly, 7 years. But I made the connection because I did sulfur dioxide trading markets in the U.S. back in the early 1990s, and so I was kind of predisposed to think about carbon as a trading commodity, and we're still waiting for some of that to develop. But those have been the two things that have come together, and hopefully we'll keep on going.
So, whenever you and I meet for a brief chat, the brief chat is typically 2, 3, or 4 hours. But the purpose here is really today to get your thoughts about where we are headed in 2023, and beyond that, all the way to 2050 or 2060. Given that probably neither of us will be around by then, we can probably say anything we want about what the world is going to look like but I think your great expertise and amazing insights in the industry that I truly cherish to hear and highly respect. So maybe we start with something small. Is where are we at in clean energy in Asia? Maybe what are the kind of top 3 countries ahead of the game, and why? And which one are the kind of bottom 3 jurisdictions, and why?
Sure. One of the things that there's been a lot of activity in Asia. Some markets have attracted particular attention. Vietnam has exploded in terms of the amount of renewable energy, tens and tens of gigawatts almost, it seems, 6 to 10 gigawatts a year. The Philippines and a healthy, diversified mix of renewable energy, some of it more almost on a merchant basis. Markets like Singapore would love to be able to do more renewable energy. There's actually fertile ground for it, but there is no ground for it. And so there's almost trapped demand that can't find renewable energy supply. I'll focus on Asia rather than on the Pacific part, so we'll leave out Australia and New Zealand for this. But we're seeing activity that we're supporting investors and policymakers on pretty much in every country. And one of the themes that keeps coming up is how much policy support is required. We had the feed-in tariff era that's really dying off. Auctions are now sort of the main way, or sort of resource-oriented contract, renewable portfolio, standard-backed contract arrangements. Those are picking up. Markets like Malaysia, have these large-scale solar programs, LSS. Actually, reasonably attractive market to develop something in. It's almost that they've limited the access to the market itself. There actually is a tiny little market engine in the Malaysian context, but you can't do a grid connected solar unless you come through their auction door. So you can almost say that there's activity, and then there are constraints, or there are barriers, or there are processes that are sort of limiting or structuring how fast it can move. But the dynamic across almost all of these is that LNG, gas, relatively expensive in 2022. And so if you can avoid using it, there's a pretty good deal to be had. So things that just solar or something like that would otherwise be occurring during a time when you'd be using some gas, that it starts to look pretty attractive. I think it draws a lot of interest in the region because most of the countries in this region are using some version of LNG or running out of other fuels and have to think about it. So it's pretty basically good fundamentals. Yeah.
So you mentioned something which is pretty critical and which I think needs to be emphasized more often than not, which is when it comes to clean energy, we're not talking about the chicken and the egg game here. I mean, it is government policy is the number one, number two, number three priority. If that's not consistent and transparent, then not much is going to happen, or if anything happens, it won't be happening for very long. So from a policy perspective, in my personal opinion, I guess China has been relatively transparent and relatively consistent in clean energy policy since probably around about 2011 or 2012. Which other countries in Asia, and sorry, the juxtaposition of that is Australia, where you've had exactly the opposite, where you've had no consistent and transparent policy that increased obviously the risk of investing there and the cost of capital. So in your personal views and experience, which would be your kind of like top picks apart from China in terms of relatively speaking, a relatively good transparency and consistency in terms of promoting clean energy and expanding to clean energy?
On a consistent basis, it's actually, I think, kind of hard to pick a winner there. China's emerged very recently as a market that, for various reasons, has had to rapidly liberalize certain aspects of its market environment and create a new framework, or fix a framework for allowing credits to be attributed to the end user of green power. So almost literally, as overnight over the last couple of months, we've watched a very significant change there, from sort of behind to, in many ways, ahead. So things can move very quickly. I thought Malaysia would go faster in terms of opening up access to I would say, more customer-driven contracting for commercial grid solar through corporate PPAs, or what they had these several programs, but they've limited the access, and so it actually hasn't been able to take off. I mentioned Singapore could take off, but it doesn't have the green resource. Vietnam has taken off almost so fast that it's hard to see whether it's going to have a bad effect on the system in terms of actually achieving reliable, secure, sensible operation. So people are starting to ask questions as, well, we were doing this really quickly, but we can't actually see what's happening. So nobody has got the recipe. I've actually been very impressed with China, just with the focus that they've changed some of these things. But, it's not quite. But Joseph, as you know, I mean, unlike a market like the US or Australia or Europe, Asia is still growing quite rapidly. So when we talk about activity, it's largely still taking that layer of growth. It's not doing a deeper cut into these markets yet. Whereas in Europe, US, Australia, we're talking about displacement and possibly pushing things out of the market. We haven't seen that really happen in Asia. So to say even that something was on fire is hardly talking about a fire of the sort that is a big fire. It's still really just fitting into, we're still dancing around the edges, frankly.
Mm-hmm. One country you didn't really mention. What are your thoughts on Thailand? I mean, I've been impressed in terms of their relative. I mean, although the let's say the political environment has been very dynamic in the last couple of decades, but the energy policy has been, relatively speaking, has offered some kind of transparency, some kind of consistency, and you've seen actually probably Thailand attracting more foreign investors than any other, in terms of numbers of foreign investors, in terms of companies, more than any other country in the world, in Asia. Any thoughts on Thailand?
It's interesting you raised that. Thailand was one of the first movers and developing renewable energy. It was one of the most, scientific term, dead set against coal. Has had some of the most strong local resistance to developing coal. And of course, the way natural gas is used in Thailand, domestic gas at a lower price tends to go to the non-power sector, and the power sector winds up getting sort of a more expensive LNG import. So it had that very early stage recipe for what else are we going to do? It's going to be gas or so quite a successful launch. In terms of the areas that we do work in, we opened an office in Thailand this year, and we do focus on the market quite a bit. But it's not the most active market for the merchant kind of investor work that we've seen. I think that will change again. But compared to, say, the Philippines, which has a much more open, competitive, open access kind of market arrangement, it's much. We see much more activity there. I think there's been more behind the meter or rooftop development in Thailand, but maybe not quite so much the activity, at least that we've seen. And my colleague Chris Starling would begin to counter me there, but just if I run up the numbers for the Lantau Group, markets like the Philippines, Taiwan, China now, a little bit in Korea, Malaysia for sure. Those have really absorbed quite a bit of the focus. And like I said, it changes quickly. This is something where you just flip a switch on a policy or you change a thing on a risk, and suddenly everybody has a different set of questions or exposures that they have to deal with.
So you mentioned the Philippines, and there was a big announcement very recently, which, from my modest perspective, is a game changer, where the Philippines is allowing foreign investors to have majority stakes or fully own renewable and clean energy projects in the country. Could you share a little bit about the current state of affairs in the Philippines and what your thoughts are?
Yeah, well, I mean, it's a wonderful thing. It's any time that any country can remove constraints on the flow of capital into green energy solutions, it's going to be pro-decarbonisation, generally good business, and generally good for both the globe and the local economy. These aren't assets that you can put on the back of a bus and drive out of the country. They're there. Whoever owns them doesn't really matter. Historically, it's been a market where international players have been very active and have worked well with local partners and local teams. So it maybe not quite the step change that it would be if, say, Taiwan eliminated its local content requirement and made it much more open for investors with any kind of capability or technology, or a much more narrowly focused set of criteria around that, rather than that. But the Philippines is, that will help. But it has been on the market. It has been on the radar for a lot of players for quite some time, and it's got a very healthy domestic industry. So yeah, we're not. I think for wind, offshore wind, that's probably where more international specialization exists from Europe and other countries. That's the wave that's coming into Asia, and I think that'll be interesting. But that's still probably out of the money without contractual support. So even with local ownership, it doesn't necessarily drastically change the dynamics. It just brings people focus and said, we can do this. So some of the other markets are probably more closed in that respect than the Philippines and would benefit from more of an opening up. But, we like it. It's good. it helps bring attention to a market which has been a good performer for quite a few investors for some time now.
I mean, we could go through the remainder of the 20 countries in Asia, but I think we'll stop it there in terms of specifics. But I guess one last market that is worth mentioning because it's just too big to ignore is India. And we've seen India in the past. I think you and I talked about this about 300 billion times in the past 3 decades, but it's always been like 3 steps forward and 4 steps back. What are your thoughts now? Do you see more recent changes kind of like positive hints?
Yeah, we're very excited about India. We have a new team that's joined us in India. That we've opened an office. We're opening an office in the new year in Delhi. I just got back from India, meeting with a number of stakeholders who in sort of the regulatory and policy community, looking at how renewables can be increased in the Indian electricity system, looking at things like ancillary services, looking at other integrative and flexibility requirements to increase and accommodate more and more renewables. And I walked away from those conversations inspired by the amount of thinking that's been going on, and how in many ways those conversations were far more sophisticated than I was having in countries that had seemingly head starts in some areas where I don't think the level of sophistication in the regulatory community quite exists. So I'm really bullish on that. We wouldn't be entering the market like that if we weren't, but it's been particularly exciting. But we are late. I mean, India has been a leader in renewable energy development. It uses long-term, it's been using auctions really aggressively, really successfully at driving costs down. It has a high fuel exposure for gas, and this is a way of reducing cost, as well as, and it runs one of the largest integrated competitive markets in the world. That they're slowly connecting it all up and adding features to it. So we see a long runway for activity there. But what we're generally thinking is that they'll need to open the market up a little bit more and figure out how to expose customers and investors to sort of a little bit more merchant risk. Not everything can be a 25-year PPA. So that will be the next thing, whether they start shortening those PPAs and expose people to sort of back-end risk, which has been the norm. I think we've seen in other markets in Asia, where they may offer 10 or 15 or max 20 a year, and there'll be some value at the end of that investors will have to compete over and think about. I think in India has still provided a little bit more protection. So terribly exciting, really huge, and tremendous to engage in, and really bullish about the prospects. Obviously, a very necessary part of global decarbonization.
If I can just pick up on a couple of points about India. I mean, I remember, I think we went there the first time, it must have been like 92 or 93. And I distinctly remember every time I went to meet corporates, and I used to be an equity analyst, I just came out being really bullish. I mean, very sophisticated thinking, excellent strategies, etc. But then, I go back to Hong Kong and look at what's happening, and then, 6 months, 1 year, 2 years, nothing happens. So execution has always been an issue, I think, in India. That's why I was joking about these 3 steps forward and 2 steps back. What do you think is different now? What makes you think that now they'll be better in execution? Again, no arguments at all about the sophistication of the people designing the markets, the corporations, the strategies. Absolutely no questions at all on that. But What makes you think that, as a country, India will be able to execute now?
I think, Joseph, it's a good question. How do you see, these roadblocks being overcome? What are they? Most fundamental roadblock to commercializing renewable energy is the instrument that is used to get the money to the developer. If you want to really go fast, you have a strong, robust, long-term instrument that delivers an assured amount of money to the developer, and you can do as many as you want. And the experience around the world has been, it's not that hard to move quickly. It's hard to move quickly at the right price, and it's hard to move quickly at, where the things are going in at the right pace and in the right location so that the grid can support. Speed is not the problem, because we can solve that. This is a very straightforward, almost commodity thing to develop. The world's componentry for wind and solar is well established. The capabilities in any country to do it at scale is something that rapidly develops. The issue then is integrating into the system. And so what seemed to be the theme for the discussion wasn't whether we could do more of this, was obviously affordability is always an issue in every country, but I didn't get the sense that the projects that were being done were the source of unaffordability of electricity. In India, I think the price has come down quite a bit, and the alternatives are pretty expensive. The theme that kept coming back is like, as we scale up, are we going to be successful integrating these things into the system? Are we going to be able to operate it the way we want? That's the roadblock I think people are starting to think about. Now, you could say, well, there are institutional or governance or other issues or systems, but I think the one that bears the most attention is in integrating. What's missing? Is it an ancillary services market? Is it a procurement process? Is it a plan? Is it that we need to identify where we want things ahead of time, or do we give them signals and let it happen? It's okay that takes a longer time. Is my view. I don't really think that's a difficult. I don't think that's a cause of delay. I think it's a cause for thinking. Now, what impressed me is that India seemed to be giving those questions the right kind of thought. So we'll see. Maybe that's a punt of a question, but I felt like coming out of it that they were ramping up. Right, pace in the past was less relevant to what's going on under the current regime and under the current direction. Seems to be speeding up, not slowing down. But I'm new to the India scene, and I'm kind of looking at it from the point of view of how does it affect our business, and we're very bullish about that. Suddenly it seems like something we have a team that can add to that debate. But you asked me 2 years ago, 3 years ago, I just said that was a bridge too far. So it's interesting time.
And I guess, at the very beginning, I said, which countries would you be most bullish on and which countries would you be most bearish on? If we take that, has a country done well, or is a country doing well in terms of additional megawatts base versus, existing capacity? I think surprise to me has been, well, apart from this China, but China is it's a different class, different bucket. What's been surprising is the numbers coming out of Australia. You've seen, the additional megawatts there. I haven't done the numbers, but I would suspect that as in terms of additional capacity growth based versus the base that they had, that's been pretty massive. And the disappointment has been Indonesia, in my perspective. Would you agree with those two statements?
Now, you raised two really interesting examples. I wasn't specifically going to talk about Australia, but what we found when we went to India is that everybody wanted to hear about Australia. That fit the integration narrative. It fit. It's like, how are we going to do this? What have been the insights from places that have gotten further along in the integration? Parts of the Australian grid have operated on 100%, 105% renewables at times. I believe there have been battery stories. There have been rapid stories. There have been. You can get to Australia. You can almost think about Australia providing a free research laboratory service for the rest of the world at that point, because it's of that level. But it's also a little bit of a chaos of a market. There's still not clarity, I would argue, about what will have to change within the Eastern Australian market to preserve the effectiveness of security of supply, reliability of supply. You have the Electricity Reliability Board that's focusing on whether market design changes are required or how to integrate the market and possibly government planned. You're seeing separation to some extent of the states in terms of their preferences and their strategies, and possibly even a bit of a localization in terms of their almost not exiting, but sort of de-emphasizing the NEM, the national market, and more into state policy. So is that really a solution, or is that a game of musical chairs? Is that so yeah, we're getting a lot of renewable energy, but are we on a path that's a shining example for everybody else? I'm less convinced. The things that you learn out of the Australian market at the moment are a bit more of how not to do things if you're someplace else, or how to, or things that you need to worry about if you're someplace else. And the big difference is it's not a very fast-growing market. It almost has negative demand, not positive demand. And that's not an Asia story. In Asia story, there's no major market that has net negative demand growth. So some of the challenges of Australia are unique, but it is showing that it can be done. High levels of renewable energy, a lot of focus on ancillary services and flexibility markets. The question is, what other kinds of commercial instruments, PPA type instruments, long duration storage, things that protect that's unproven ground. So we're still working there. So I'd say the jury is out. Everybody we work with wants to understand the Australian market, if it's a regulator or a policymaker, because that's in Asia, that's where you go to see the future that people worry about or that people are excited about. But I wouldn't say that the Australians are that happy with that they're on the right path yet. So it's a mixed bag.
Just to one more question on Australia. The interesting thing is that, as mentioned earlier, is that everything is driven by governments, right? I mean, clean energy will be successful only if you've got the appropriate government policy, and it doesn't have to be a very active policy. It can be a social policy, but as long as there's a policy, things can move forward. But the interesting thing in Australia has been that you didn't really have the support from the federal government for many years. Some state governments were a little bit more pro renewables, but the private sector was really the driver of what we can call is success defined as the additional clean energy kilowatts that were installed, notwithstanding the chaotic market that you mentioned. So is that, like, from an energy economics perspective, an interesting example of where the private enterprise participation can really drive and change things?
I think probably can't cover all of that question, Joseph, but I think the part that certainly the private sector has been super active in Australia has been the people's roofs. So the distributed generation rooftop solar dimension of the Australian market has been on fire. Not like a California fire, but more like what fire, when something was on fire, meant when it was really booming. That seems to still be going. It's huge percentages. I won't name a number because I'll be wrong, but it's a large number of rooftop penetration already. And that's been the private sector. But what has driven it? It is, in some sense, it's been a measure of the avoidability of tariffs. Some of it has been redistributed. That's a problem usually early on, but once it becomes such a large amount of the system, you can't really do anything about it. So it's induced private sector. Maybe the signal was too strong. Maybe the signal was not quite a correctly set regulated signal. Maybe, but the private sector will respond super fast, as we know, if you dangle the money. You only need two things. You need the right to enter and the ability to extract money. And then the private sector will explode in the renewable energy sector, because it doesn't take long to build anything. It's not like a nuclear reactor that takes 10 years to get approval. It's not like a coal plant that takes 4 years. So you just need those two things. And Australia was a very early, fast mover on those two elements. Doesn't mean the signal was right. It just means it was strong. So, yeah.
No, that's great. And like you said, we could actually talk about this. Could be a PhD thesis for somebody, or a couple of PhD theses. Great. So I guess we've covered Australia, and we'll just skip Indonesia, because that would be another 3-hour conversation anyway. So we spoke about some of the key countries around the region. We looked at mentioned China very briefly. Talked about Thailand, Malaysia, Philippines, Indonesia, and Australia. One thing which I guess I want to ask you, Mike, is about capital flows. Where there's an enormous amount of capital that I see around the region, be it from private equity, be it from corporations, etc., that are looking at investing domestically or investing abroad. Actually, one conversation I was having with somebody the other day was about China, because they were arguing that apart from the geopolitical aspects, the fact that because of COVID, there was a major slowdown of overseas investments on the part of Chinese corporates on the clean energy side, and with COVID restrictions slowly being lifted, we could see kind of like a bit of a boom from next year. So in terms of capital flows, could you just very generally give me your take on what is there a lot of money out there, and if there is, or whatever money is out there, what is it chasing?
I haven't seen money be the problem here. I think there are probably fair to say many problems in the world at any point in time, maybe even more sometimes than others, like now is. But finding money to move into renewable energy sectors where there's a perceived opportunity does not seem to be one of those. So that's exciting. You mentioned China. We do. One of the issues that China's had as a sort of a major part of global supply chain. For those commercial and industrial customers that are aiming to be sustainability leaders and or have made commitments on behalf of themselves or behalf of those to whom they supply to be certain percentages of renewables by, say, 2025, 2030, et cetera. The instruments available to do that, to actually do that with additionality, with economic reasonable price relative to the alternative, have been quite limited. And one of the issues for China has been that China has been pivoting, evolving all of its rules. And for a while, you could do a greenfield project with a partner and give yourself the green energy credit. But then there was a reform that said, well, those green energy credits are probably going to be claimed by the grid. And so if you're claiming them, it would be double counting, which technically would violate what RE100 or other standards would require. You'd be forced more or less to say, well, it's the only thing I can do. So that's what I've done. But then very recently, I think November of this year, China changed it so that the green energy credits would flow to the end user if so claimed, so that you can actually now do a green PPA, a true corporate PPA in China of the sort that you might think you had done a year ago, but technically it wasn't that thing. And so now that market is in place. Now, we think it's starting to get some momentum, and we've actually done some procurements and some placements of GPPAs for some clients. Now, there's still a premium, there's still a higher price, and that may dissuade people or push people to say, well, wait. And there are still IRECs, that are available in China that are at a lower price. And so, you don't ask too much about where they're from, or you don't demand too much of what additionality story they fit. They are cheaper. So the world will start dividing, I think, Joseph, in terms of the appetite for a clear entitlement to green power, additional, and all of the other premium features, and then some of the instruments which may also be available but will be cheaper. And China is going to be, I think, at the front line of this almost split market, where you'll see some attributes trading at a higher price than others. And the question is, what are you buying? And I think it'll be very interesting to watch the standard organizations and the goal-setting sort of navigate this almost definitional issue, which will then have hopefully a profound impact on what kinds of projects and what kinds of money supports those projects. But that was November. This is December. We're just seeing these pivots take place. So China has become, I think, very, very interesting in the green space from an attribution and a corporate playground perspective. The question is, are the toys too costly? And of course, we're coming after COVID, so if everything is, still in flux, but changing daily, frankly.
Moving to a forward-looking gear, so to speak, looking kind of like at the outlook over the next in 2023 and beyond, and actually starting with China, do you think that we will see a flood of Chinese corporations investing in selected markets in Asia? I mean, obviously, there's going to be some, let's just call it, in the Asia Climate Finance podcast, we don't talk about politics because I'm not qualified and it's too complicated. But apart from kind of like countries which may have or markets which may have geopolitical kind of issues, do you see Chinese corporates potentially kind of increasing their investments in clean energy in some selected Asian countries?
I'm a bit skeptical there, or at least not seeing it move quickly. Not within broader Asia. The parties that seem to be massing up the most, there's a saying: "To those who have, more shall be given," which is sort of in the economist world, not the biblical one. It's sort of it's the economy of scale, the momentum effect, and what we see is that it is hard to build momentum-oriented renewable energy portfolio in Asia if you are starting today from scratch in a country. So we've seen premiums on portfolios. We've seen lots of transactions of multi-country portfolios. We've been part of many of those. So we're seeing like local teams building. Constant Energy was a good example of something that got started and then has become bigger by being acquired. I think we see those kinds of themes run through the region. So to say like a Chinese mainland company coming into Asia suddenly developing what a Vina did, or what an Equus did before Vina, or a Macquarie did, or what AC Energy has done, that just takes a lot more, I think. So we may see partnering, of course, but I'm still, I think it's hard for a Western company to come into Asia cold at this point, because many of these aspects are portfolio, they're knowledge-based. The only change that I'd say is that the offshore wind community, which has a lot of specialized expertise, we're seeing members of that community come into Asia suddenly. It's a new field. Taiwan, Korea, Japan, and possibly the Philippines, depending on what the level of support is available. Those activities are almost discrete, but we see people coming in and like Ørsted saying, no, we're not going to do the next Taiwan offshore auction because it's not quite right. So, but it's not so much will the Chinese companies or mainland companies invest? It's more like what is the element of an effective strategy? How do you actually build that momentum in the region? Crack that nut, and then I think anybody's money is good. But that's the hard part. I'd be interested to know whether that's that's out there proposition. But I think it was an easier market to enter 5 or 6 years ago when people were accumulating. It was harder to argue that they were going to make money, but then you watch what the portfolios have been able to do and what the funnels that they've created have been able to allow them to do. It's much more. It's like an iceberg. The thing that you see and the thing that you don't see. It's always the thing that you don't see that's the most important.
So given your rich views and your amazing amount of experience in the region, how are things going to evolve over the next 25 years? I mean, I know it's an impossible question because there's so many variables, but are there some particular technologies or particular jurisdictions which make you a little bit more bullish than not? I mean, I still think that the kind of energy security shock, or at least it's what I call it, has kind of woken up a few governments. If you look at, I was talking to somebody earlier today about the price per kilowatt hour of gas in Japan, of coal in Japan, and of all power generation, believe it, it's still have some in Japan, shockingly. I mean, you're talking about, extreme multiples. Is this ridiculous? And that's a shock to the system. And there's other countries out there. I mean, you see Korea Electric Power, which is in for lack of a better expression, financial crisis right now because they can't put up prices and their fuel costs is going through the roof. So notwithstanding that, I mean, my personal outlook is still extremely bullish because I think the momentum was already there, and this energy security issue plus pricing issue is going to motivate a lot of countries to kind of get the ducks lined up more adequately. What are your thoughts, Mike?
No, I absolutely agree. Going back to the first framing thing, the thing that made Asia interesting for renewables in a more durable way as the LCOE started to come down was the displacement of gas. That makes it possible to bring in a reasonably cost, solar at minimum, but wind also, and have a way to monetize the value of it without it actually raising consumer costs. Well, now you take gas and you put it on steroids, so it's super high, and that's it. Now you say, well, battery costs have also gone up. Well, who cares about battery at the moment? There's still plenty of room to put renewables into the Asian systems before you have duck curves or any of the other things. If you just add up all the available gigawatts across the region, it's still very enormous before we start getting into, I mean, you always have to be smart and you ask all the right questions about how much can we put in this location in this country, but collectively across the region, we're deep into tens and hundreds of gigawatts of renewable energy before we start spread out over all the relevant countries, before we have problems. So then you throw in some batteries at the end, and if you do some analysis and the governments constrain imported fuels out of fear of this happening again, if your hypothesis that coal investors aren't going to rapidly expand or build new coal mines to flood the market with cheap coal, that they'll eventually be on a exit path, that they'd be better off milking high cost coal against dependent hooked existing coal plants than to try to drop the price of coal and get more coal plants. That gas, same kind of story. Then it's a very bullish outlook for renewables in that context, which is why the conversation has to pivot to flexibility. You may not need it immediately, but you will need it at some point. And this has been a backbone of the gas story. But I think the gas story people have split and they've conflated two different things. The gas story is supposed to be about flexible plant to some, and it's about moving a lot of gas to others. And it's very hard to move a lot of gas if the gas is really expensive, but it's okay to use it flexibly to keep the lights on because you're willing to pay a price then. But that's not a whole lot of molecules. LNG is not a system that's set up to move just a few molecules on Thursdays at 2 o'clock. So it's trickier to do the gas molecule component. It's easier to do the gas infrastructure component, easier to do the open cycle gas turbine, the combined cycle gas turbine, but it's harder to figure out what my usage profile should be. In the meantime, while people can't agree on that, the renewables keep coming in because that's what you can do. So, I think that's been the Philippine story. If you just look at it, it's been difficult to get counterparties to contract to cover the LNG supply. People have taken risk on the infrastructure, the power stations, but a long-term LNG supply for the Philippines has still been elusive, and because sometimes the Philippines has a lot of cool temperatures and lots of rain, doesn't need it. So how do you balance? I think that story, Joseph, is very compatible with bringing in renewable energy. Then the question is, how do you integrate it? What flexibility services are needed? But and when do the batteries or the long duration storage, or I won't say the H word, but I might say the ammonia word, but maybe not the word. And we'll just see, where that, when does that get interesting down the line.
Yeah, I think if we had green hydrogen discussion, it would be a very brief discussion if we're talking about the short term anyway. So if I can just kind of think around everything that you've kind of said so far. Asia, enormous amount of growth potential, enormous amount of investment opportunities in clean energy. The price signals are all there. The consumption growth profile is very, very exciting. Obviously, there's a few developed markets where growth is a little bit slower, like Australia, but overall, the market picture looks very, very exciting. Specific markets will need some more mechanisms and some more incentives to kind of move to the next level. Did I summarize that in? Did I kind of miss, or do you want to rephrase it? Or
I think that's right. Somebody asked me a question at a conference of like, what would allow us to go further faster? And I said, just to be provocative, that I thought that all the necessary technologies to advance decarbonization faster existed already. And that the only thing that we had to make peace with was that getting to decarbonization was a two-part problem. One, we need to bring the supply in, and the other, we need to push the carbon emitting supply out. Getting supply in Asia for growth is really not that hard. That's what we see. Offsetting growth means, renewables versus what? And if it's coal, we're not going to do it. We might do a little bit of it, but we're not even getting through these energy security years. The coal that people talk about is not like so much. It's just enough. So that's okay. But pushing an existing, probably less than 10-year-old coal power station that was built in Asia recently out, that's not going to happen anytime soon. So we don't have the same issues of 50, 60-year-old coal plants in Australia. We don't have the same opportunities that most of the coal plants are gone in the United States because gas was so cheap. Europe is dealing with the Ukraine. Asia is just going to have a fleet of youngish, relatively efficient coal plant for quite some time. So, but the growth, 2, 3, 4, 5, 6, 7, 8, 9% per year, depending on your country, will give an enormous opportunity for renewables to be added to the system. And then we have to wait. And, we can go so fast. People want to go faster. I think that's where it starts falling over. That's where we push the systems out of balance. But we can do quite a bit for the next 10 years, even just building around the existing coal-based infrastructure. And I think that would be a smarter way to go rather than to try to push too fast in markets that don't have a whole lot of market sophistication. By that I mean electricity market, sort of sophistication of trading and ancillary services and all of that kind of stuff. So I'm very bullish. I just think it's a different problem in Asia because it's still growing super fast and it's younger.
No, that's
any fast growing system is going to be it's younger because it was built recently.
Yes. And China being a great example of where they got so many relatively young, efficient coal-fired power plants.
You can really weird situation. Sorry, you can get a really weird situation where China is leading on the renewable energy uptake, and at the same time appears to be trailing on its use of coal, and it's just because most of it was built within the last 10 or 15 years. It's two times more efficient than everybody else's coal, but it still emits carbon. But changing that structure over is an order of magnitude or two different in cost than what the rest of the world is dealing with, and that will be same for India. I think that part is very undercooked in the West.
I totally agree. Mike, I just wanted to wrap it up. Do you have any final thoughts or final takeaways, or recommendations? If you're, I don't know, private equity firm looking at Asia or over the long term, or any other thoughts to wrap it up?
No, thanks, Joseph. It's always an interesting topic because you can take it at such a high level, and there's so many things going on, and there's a lot of things going on. Asia's of an economic order of magnitude that you could almost just call it analogous to Earth. It's such a big thing. So there are opportunities on Earth. Is that helpful? We have to dig more deeply. And is there opportunities in Asia? Yes, everything. But we're looking at every country, and every one of them is moving in this direction towards renewable energy, towards more and more rapidly seeing that as part of the mix. So I don't think that's an issue. I think the smarter questions are now coming at integration and what rights the customer has to drive this process. For example, if you want to be sustainable and 100% renewable, you can only do that in so many countries. Some of the countries you can't do that at all. You have no way to fully green up your supply chain if you're operating in certain Asian countries because there is no mechanism. So when leaders can't lead because there's nothing they can do, that's a problem. So I think the next wave of Asia is to try to solve that. Work to make it possible for those who want to do something faster to have the mechanisms that are needed to support that, and let the planners plan around that. I think that would go quite some ways, and that's not the way some of the markets are thinking, and I think that's a mistake because you have these first movers, and you want them to move. You want them to show that it's done.
Yeah, my 2 pennies worth, because it's the end of the year, so I'm allowing myself to have a little bit of an outlook, is that there are some countries getting the mechanics right, or at least the mechanics look relatively right, and so some other neighboring countries will kind of learn from them and say, well, maybe we should kind of be accelerating things as well. That's I don't know if it's my hope or if it's accurate non-scientific view, but that's my 2 pennies worth. Mike, I just wanted to thank you. We're very, very close to the holiday season, so I appreciate your time because I know you're very busy and traveling around and stuff. So thank you very, very much for all of your insights today in the Asia Climate Finance podcast.
Thanks, Joseph. I really appreciate the chance to catch up with you now that you're in your new Lisbon location, and really excited about the topic, and hope for the holidays everybody winds up having a green Christmas, and we'll go from there.
Yes, a green, healthy, and peaceful Christmas. That's what. The holiday season for some people, Christmas for others.
Exactly.
Thank you once again, Mike. Really appreciate it. Thank you so much.
Thanks, Joseph. Appreciate it. Cheers.
I hope you did enjoy this episode of the Asia Climate Finance podcast. I would really appreciate any feedback, topic ideas, etc. My contact is in the show notes. Thank you.